Ladies and gentlemen, good day and welcome to the Transformers Rectifiers India Ltd Q2 FY25 earnings conference call, hosted by Nuvama Institutional Equities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shubhadeep Mitra from Nuvama Institutional Equities. Thank you, and over to you, sir.
Thank you. Good afternoon, friends. On behalf of Nuvama Institutional Equities, welcoming you all to today's interaction with the top management of Transformers and Rectifiers India Limited. We have with us today Mr. Jitendra Mamtora, the Chairman, and Mr. Chanchal Rojora, CFO and Advisor to the Board. I would now like to hand over the call to the management for their opening comments before we do the Q&A session. Over to you, sir.
Good afternoon, ladies and gentlemen. Thank you all for joining us on earnings conference call. We are delighted to have you here as we discuss our company's performance over the past quarter and first half. Following our board meeting earlier today, we have promptly released our financial results and investor presentation on the stock exchange. We are pleased to let you know that we have a total order book of 3,500 crores as on September 30th, 2024, out of which about 1,700 crores of orders which has flown in the last quarter. Looking ahead to the remainder of fiscal year 2025, we have successfully navigated through phases of stabilization, turnaround, and growth. We are now focused on consolidation, expansion, and achieving sustainable profitability. We have implemented strategic growth initiatives across the organizations which are already reflecting positivity in our performance. Our revenue targets for the year remain unchanged. We extend our sincere gratitude to each participant for joining our earnings call and for your continued support and trust. We hope we have addressed your queries satisfactorily. Moving forward, we are excited about the upcoming milestones. The first phase of new capacity addition of 15,000 MVA will start for commercial production from January 2025. Trial run for fully automated radiator manufacturing facility up to 765 kV has already started. First phase of fabrication unit will be operational from March 2025 or a little later, but not later than June 2025. We target to be 100% backward integrated organization by Q1 25-26. Negotiations for organic and inorganic growth avenues are at a very advanced stage. Furthermore, the visit to Europe last month focused on an increase in export share by more than 25%. Strategic tie-ups for creating synergies are expected with global giants in the field of renewable oil and gas as well as special application rectifier transformers. In addition to this, we are proud to have received the order of 420 kV three-phase reactor with synthetic organic ester insulating fluid from Power Grid and an order for an electrical arc furnace for 175 MVA from ArcelorMittal, Mexico. This is our first large transformer to Mittal Group for arc furnace. And the two other orders for the arc furnaces are going to follow. They are in the pipeline. I have recently visited them and praised them of our capacity and our new expansion plans. They are happy with that, and as I said earlier, the two other arc furnace transformers are in the pipeline, besides other auxiliary transformers and large power transformers. Once again, thank you all for your participation and support. We look forward to your continued partnership as we progress into the next phase of our growth journey. I would now like to hand over the mic to our CFO, Mr. Chanchal.
Thank you, Chairman, sir, for providing an overview of the current quarter and the first half of the year. I would like to share some key financial highlights to our esteemed shareholders. Before that, I would like to tell all of you that this time again we are the first company to declare the result in the record time of the 7 days for this quarter and the first half. This is continuously second time we have been doing this thing. Dear shareholders, I am pleased to present the accomplishment of our company for the second quarter and the first half of FY25, which has been one of our strongest quarters in the past decades, marked by sustainable growth and revenue profitability. Financial highlights. In Q2 FY25, our standalone revenue reaches to 457 crore rupees, an impressive increase of 75% Y2Y, and H1 figure stands to 773 crore rupees, a milestone achievement with an increase of 86% compared to the H1 last year. We achieved EBITDA of rupees 76 crore rupees for quarter 2, a significant rise of 236% year-on-year basis, and H1 EBITDA stands at 118 crore rupees, increase of 348% Y2Y, with an operational EBITDA margin of 16.53% for quarter 3 and 15.28% for the H1. Our profit after tax for quarter 2 stood at rupees 42.18 crore rupees, showing a robust increase of 1272% year-on-year basis, with a PAT margin of 9.22%. During this quarter, we secured order totally 1,031 crore rupees and total order worth rupees 1,729 crore rupees for the H1, highlighting our strong momentum in strong inflows. As of September 30th, 2024, our unexecuted order books stands to rupees 3,500 crore rupees, which will be executed in next 18 months' time. Our revenue target for the current financial year remains intact, as informed by Chairman Sir also, and our journey towards the $1 billion revenue in next 3 years, the next 3 financial year has already started. Throughout FY24, we have placed significant emphasis on the people management and upskilling initiatives, acknowledging the pivot role of our workforce in our sustained success. We are focused on enhancing technical skills, fostering leadership readiness, and improving overall competence across our manufacturing, sales, and engineering division. Our strategies, recruitments in key areas such as engineering, sales, and digital domains has been aligned with our business objectives. Looking forward, we are optimistic about our prospects for FY25, anticipating enhancement across various financial metrics. Our strategies are centered on achieving a seamless balance sheet by reducing debtors and optimizing inventory management. Our ultimate aim is to transform into a debt-free company in the near future, supported by clear and actionable plans already underway. In conclusion, we are well positioned to capitalize on the opportunities within India and outside India evolving energy sector and other sectors. With robust corporate governance, advanced technology, superior products, and dedicated team, we are confident in our path towards sustainable and profitable growth. I extend my heartfelt gratitude to our customers, the board, management, unions, and particularly to our committed employees for their unwavering dedication and support. Together, let us continue to cultivate a promising future. Thank you very much. Shobhadeep, we can have a floor for the questions, please.
Sure, sir. Say the listening, please open it for Q&A.
Sure, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Thank you so much for taking my question. I'd like to ask a couple of questions on the finances. First one being that we've seen an unusually high other income this quarter. It's generally twice of what we see for the whole year. So, one, why is that? And two, how much is sustainable on a full year basis? And secondly, we see the margins for last quarter, this quarter are the same, then there is room for improvement.
Nidhi, first question I could able to hear you properly. Second question I did not hear. The first question reply is that the increase into this is because of the QIP funds what we have received is placed into the liquidity fund till we utilize it. So we have received the revenue on account of that. So that is the reason of rise into the this income. And as far as the sustainability of this is concerned, we are not much focused on the other revenues. We are more focused on the operational revenues, and where we have full confidence that this is going to be increased and on sustainable manner, on quarter to quarter and year to year. Can you please repeat your second question?
Yes, my second question was on the margin. So now we've seen that for the last 2 quarters, we are seeing 70% EBITDA margin if you take out the other income. Is this a target margin, or are we hoping to improve margin beyond this?
We are hoping to improve it. This is not our target margin. Our destination is something else.
Okay, and what are we aiming for the full year in terms of margin?
In terms of the margin, we should be remaining to the same line in the full years.
Okay. All right. And my absolute last question would be, what percentage of our order book is currently exports?
It's around 10%.
All right. Thank you so much.
Thank you. The next question is from the line of Ganesham from Unifi Capital. Please go ahead.
Yeah, thank you for taking my questions. The first question is just on the export side, right? So I know we're targeting 25% by 2026 from the export side. What I'm trying to understand is what are the markets that we're trying to structure, what the go-to market strategy is, and who our competitors are, and what is sort of the edge that we have. That's the first question.
Ganesham, see, the competitors are all the multinational companies. And from India, if you say, for export, it is Toshiba is playing a major role in the exports. They do a lot of exports. Their export is to the tune of 1,000 crores plus, but mainly into distribution transformers. They are not much into power transformers as far as the export is concerned. So their revenue comes from the transformers for distribution transformers and also for the transformers for the solar parks. So they are the major competitor from here. And we are targeting the market, Europe market, African market, and also the American market.
Got it. Yeah, please go ahead.
Ganesh, and to add up what Chairman Sir has told you just now, our target on the export side is more into the special duty transformers, which are our expertise. Like just now in his speech, Chairman Sir has explained you about the electric arc furnace transformers from Arslan Mittal. So these kind of the transformers we are targeting more because we have the expertise on that, and we are the only company who is making these transformers as of now.
In India.
In India.
All right. So I understood the picture in terms of a domestic competitors, right? But overseas, the edge that you're providing is more on the cost lines, or is there also know-how involved, right? And if it's mainly on the cost lines, what would be the differential between us and the global peers? Something manufactured out of India.
Ganesham, at the moment, it is not the price. It is, technology, we have the technology. Technology is not an issue. Issue is the delivery. So most of the overseas players are occupied for next 2.5 to 3 years. So delivery plays a major role, and the importance will be given to the one beside. Price they will not be considering, because if I give them the transformer earlier, they will accept my higher price also. So there is no competition as such. Today, it is your capacity to deliver to them in time. That is what it is. So as such, if you ask me, there is no competition. Everybody in the world is fully booked. I don't know about China, but if you look at the European manufacturer, the manufacturer from Turkey, manufacturer from Russia is they are isolated, but otherwise also they are busy supplying to their local requirement. And then American manufacturers, they are booked for another 3 years or more. So now they are talking about the delivery in the year 2029. So, if you just say there is no competition, price-wise there is no competition. We are qualified up to 765 kV transformer with our references. So it is only going to be our capacity to manufacture and deliver them in time.
Understood, sir. Okay, that's helpful. So going forward, how are the working capital terms on these exports, right? Because considering the shipping and that you have to export, do we recognize revenue once it reaches the customer, or how does that work? And are there any offsets in terms of what we ask from our customers compared to our domestic side of the business?
Ganeshan, as far as working capital side of payment terms is concerned, we have already taken quite a large of initiatives, and we are slowly converting all of our customers into the LC customers, which will help us for the working capital size. As Chairman Sir has just explained you right now, the pricing is not a constraint. Constraint is the timeline. And to meet out the timeline, even the customers doesn't mind to give us the advance also if required, particularly the companies like us. So this is not going to be any challenge in future.
Understood, sir. That's helpful. Maybe I'll keep it to the last question then. Just on the new capacity, I think now we're expecting to start it in earlier December, right? So was it because the equipment didn't reach in time or anything, and was it part of the guidance that we had sort of considered?
It is because of the heavy rains in Gujarat.
Okay, understood. Okay, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Tanay Russell from Nomura. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, as you mentioned that the capacity has been booked, all over the world. So on the supply, I wanted to see the supply chain constraint. Okay, we are reading that there are some constraint on the CRGO tank as well as certain types of bushings. So how are you navigating this supply chain? Your thoughts on this?
We have already said that we are going for backward integration in a big way. So one of the project is for the manufacturing of the tanks, for which we have already signed up with the agent to buy the land, and it is finalized, and we have already paid them. So it is now within by Dussehra, we should be able to get the possession of the land, and as soon as we get the possession of the land, we start fabricating. We start for the fabrication, and we are going for the ready to use for the fabrication kind of a thing. So all the activities will be done at their end, and they will come here and then fix it. So that time taken for the fabrication and the installation takes very less time. So that is one fabrication. And CRGO, as far as the CRGO is concerned, we are in the advanced stage of taking over one of the processing houses in Ahmedabad for processing CRGO. And we have lined up for the supply of CRGO with the major players like all the major manufacturers, of the electrical steel. So we are assured of our requirement, which is something like, today it is something like 1,200 tons, 1,000 to 1,200 tons per month. So, yearly it is going to be something like 15,000 tons. So we have the contract for the supply of more than this, by which, we'll be able to also serve our peers, because we are taking over the plant for the processing of the CRGO. And the plant which we are taking over is one of the best in the country. Mm-hmm. And then the bushing also we are in the advanced stage of collaborating with one of the manufacturers, and will be the first one to manufacture those RIP bushings which are not manufactured in India as on today. Now, for OIP bushing, there are three kinds of bushings you get today. One is OIP, that is oil impregnated. One is resin impregnated, and then one is what they call it, epoxy impregnated. There is no paper involved there. So all the OIP we are already into it up to 220 kV, and 400 kV will start with 400 kV shortly. And for the RIP and RIF bushing, we are tying up with another manufacturer who has a track record of last 10 years into the same field. So we don't want to experiment with our own processes and take little more time. So we have taken a conscious decision to go for the collaboration with or the technology transfer with one of the established companies. So that was tank, CRGO and bushing, which we have taken care of.
Thank you, sir, for a detailed answer. Thank you. That's it from my side. Thank you, sir.
Thank you. The next question is from the line of Chinmay Kabra from Emkay Global Financial Services. Please go ahead.
Yeah, hi sir. Congratulations on a good set of numbers. So I just wanted to, I think I missed it, so just wanted to get the order wins that has happened in Q2 FY25 and H1 FY25 on a holistic level.
Chinmay, if you go through my investor presentation which we have given to the exchange now, you will get the entire detail into that. But just to give you a brief about that, in H1 we have got the orders of 1729 crore rupees from the across the sectors, and in this quarter we have got the orders of around 1000 crore rupees.
Understood, sir. Thank you. My second point was, till when do we plan to attain the debt-free position?
We are working on that direction.
So I mean, can we expect that?
I can't give you the deadline, Chinmay, because it is a very heavy capital-intensive industry. So till the time I reach to my 10% PAT for next 2 years, continuous 2 years, this position will remain. But slowly we are working on the directions to become the tax-free company.
Understood. And if you could provide a breakup of the revenue between domestic and exports.
As of now, I cannot provide you those things, but yes, from my entire order book, 10% is the export book.
Understood. And
last year, the FY20, March 24, our exports was around 10% levels, and this year it is going to be more than that.
Understood, sir. Also, just wanted to gain an understanding of the capacity utilization. That is.
Can you please come back to the question again, because we have to address almost 50 questions, 50 people now. So it would be great if you can please join later on also.
Sure.
Thank you. The next question is from the line of Shubhadeep Mitra from Nuvama Institutional Equities. Please go ahead.
Thank you. So my first question is, given the current order pipeline that is visible to you, would you be guiding for any particular sales growth or margins over the next couple of years?
Shubhadeep, as I told in my speech, that from this year in TRIL, we have started a journey towards $1 billion revenue company next 3 financial years. And we are working on that direction, that in next 3 to 4 financial years we want to reach there. As far as my order book concern is there, the order book of 3,500 crore which we have in right now, this entire order is going to be served in next 18 months time. And apart from this, we have not taken up any orders from the capacity expansion which is coming up at this moment. And apart from this, my Changodar unit, which is basically up to 220 kV unit, is still 50% is to be filled. So as I told you in my entire conversations, that we are targeting for almost 3,500 crore numbers for next years, and the journey is continuing towards $1 billion revenue.
Perfect.
And as far as the margin is concerned, we are consolidating our position, not only in terms of the revenue, but also from the margin. And as Chairman Sir is keep guiding us always and keep telling us that in the good olden days, we reach up to the 19% margin levels. So we are aiming for that.
But that you would say is more like a FY27 kind of a number, or can it come faster?
I think it can come faster also. If the way we are going, things remain continue.
Understood. Lastly, sir, on the working capital, are you seeing any escalation in terms of debtor days or working capital for this particular quarter?
No, Subhadeep, we are trying to reduce it quite this thing. Basically, you need to understand my debtors composition. In my debtor composition, there is around 100 crore rupees number, which is lying with the utilities as the retention money, which basically always comes after the project is completed. So it is basically a money which is not due. But my Indus doesn't allow me to separate it. That is the reason I have to keep it into the debtors. Right. So that's the reason you will find this always into there. And as far as debtor is concerned, please do understand that when I am supplying to utilities, I have the delivery terms on the FOR basis, and my payment is due when the material reaches there and accepted by the utilities. And on an average basis, every utility selling time is around 30 to 35 days. So this major components, if you remove it, my debtor cycle is very less. If you see my industrial customers, almost all of my industrial customers either on the LC basis or on the vendor financing basis or on the advance basis. So as I have been guiding in all of my these things that in by next year we have a target of around 120 days working capital cycle, and we are working on those directions.
Understood.
And that is probably the best working capital cycle for capital goods industry.
Perfect. Just one last bit on potential acquisitions. You did allude to acquisitions possible on the CRGO side and the bushing side, as Chairman Sir was saying. Are there any other acquisitions that are on the anvil or any plans that you can throw light on?
No, the bushing is concerned, we are not doing acquisition. We are taking up the entire new facility. We are basically tying up the existing manufacturer who has got the expertise of the technology and machinery. So he's providing entire know-how, technology and machines to us and helping us to setting up the unit here itself. So it's going to be the complete new facility for us. CRGO is what we are talking about, processing unit. Yes, we are into the very, very advanced stage. We have already signed the term sheet with the target company, and pretty soon, as soon as probably next week, we will be announcing it, this acquisition. Apart from this, we are working on a very advanced stage on inorganic acquisition. MOU has been signed on that also, and probably in this month or early next month, that will also be completed.
Understood. Thank you so much. That's it from my side.
Thanks.
Thank you. The next question is from the line of Gunjan Kabra from Niveshaay Investments Advisors. Please go ahead.
Thank you so much for the opportunity and congratulations for a very, very good set of numbers. So I'll just complete the two questions. With respect to the demand and supply mismatch that is there, so right now demand is huge, but you're seeing that the top players, if I count like top 10, 12 players, including ours, the capacity that is coming up in the market is around maybe say 70,000 MVA. So how are we seeing in terms of the new capacity that's coming up with respect to demand?
Gunjan, I think the same question you had asked me in last quarter also, and I had replied to this question also. See, we don't foresee any overcapacity coming in next 2 or 3 years now. And just now that Chairman Sir, when he was addressing to the export issue also, he said is that right now there is no dearth of orders for anybody. There are ample amount of the order is available for every transformer manufacturer, and we are also working on that level. You can see that right now I have 18,000, 19,000 crore rupees of inquiries pipeline, and every day inquiries are flowing up. So that's not the constraint at all, and capacity expansion is not coming